Hey, finance folk! Welcome to the EU Finance Podcast. My name is Aidas Palubinskas, and I am your host. Maria Luís Albuquerque is Commissioner for Financial Services and the Savings and Investments Union. Her task is to unlock savings, to increase household wealth, and to fuel business growth, especially in key areas like digital innovation, climate transition, and defense, while safeguarding financial stability. She's also striving to ensure better access for EU businesses to finance and creating better opportunities for citizens to improve their own financial security. The Savings and Investment Union, SIU, is at the forefront of Europe's financial strategy, aiming to create a more robust and inclusive economic environment. Commissioner Albuquerque will share how this initiative is designed to empower EU citizens and businesses to help the EU economy grow, increase our resilience, and build a better future, even as we see present market turmoil coming from across the pond. Additionally, we'll explore why financial literacy is crucial in today's world. We're going to learn about the ongoing efforts to enhance financial education, ensuring that everyone can confidently navigate the financial landscape. Greetings and salutations, Commissioner. Welcome to the podcast.
Hi, Aidas. Thank you. Thank you for having me.
Let's jump right into it. One of the key goals under your mandate is advancing the Savings and Investment Union, the SIU. Could you tell us what the objectives are and what that actually means for everyday Europeans?
Well, the objectives are actually to improve the functioning of our financial markets, because we have 27 member states. A lot of things still happen within national borders, and that means that we are not taking the full potential of directing our savings into productive investments. What it means for the normal people, such as you and me, because we are normal people, is that you would have way more opportunities to put your savings to work in investments that would provide higher returns, that would have the risk profile that one would prefer. You could invest into innovative companies or into green investments, to digitalization, or you can simply put money in a fund or in a pension fund to have others make those decisions for you. It's mostly about giving people the opportunity to put their savings to work with a higher return than just leaving it at the bank. And at the same time, it will allow companies to have access to funding, which in turn will allow them to grow, innovate, create better jobs. It's actually a project that can have a very positive impact for the lives of everyone around Europe.
Okay, but listeners of the podcast, and in this case me as well, might listen to that and think, oh, that sounds an awful lot like the Capital Markets Union. And we've been working on the Capital Markets Union for 10 years, and it's been slow progress. What's different about the SIU versus the CMU, and what's different this time?
Yeah, I do know how long we've been working on it, because I have been involved for most of those 10 years myself. And yes, progress has been slow. Well, the difference is that the SIU, the Savings and Investments Union, it's a broader concept. So inside the Savings and Investments Union, we do have the Capital Markets Union, eliminating the barriers between capital markets, but we also have the objective of completing the banking union and helping our banking sector become more resilient. And we have a very strong focus on the retail side. So we are very much worried about the individuals, the households saving and giving the people the right opportunities to save in the best possible way for their life objectives. It could be to buy a house, it could be for retirement, it could be to put your children to work, to study abroad. Whatever objective you have when you save, we want to give people the best opportunities to put that money to work.
Got it. Why are the capital markets and European companies still at a disadvantage compared to other international markets? What do you think are the biggest barriers and difficulties that currently exist that prevent success in Europe and to present us with more interesting and productive results?
Well, in some areas, and financial markets and capital markets in particular, scale is very important. For a market to be efficient, it has to be big. And no single member state in the EU is big enough to compete at the level that we need to compete. So we are not competing among ourselves anymore, or we shouldn't be. We should be thinking who are our competitors outside Europe, and we should aim at being as efficient as they are, which means that we have to make our capital market big. That means bringing together the resources that are now scattered in 27 different capital markets, eliminating the barriers. And it's not about having one single stock exchange, centralizing anything in Germany or France. It's not about that anymore. It's about making our markets interoperable. So wherever you are in the EU, you have an entry point and you can see the whole pool of opportunities existing across the EU. And that kind of scale makes us actually very competitive. We are very big. We are 450 million people, and we do have a single market. But our single market is still limited. We haven't yet benefited from its full potential, and in financial services, this is very much true. I would say that we have many different barriers. First, we need a change of mindset. As I was saying, it is not about us competing with each other. It's not about thinking whether my neighbor member state is going to be better off or not. It's about us joining forces, getting our resources pulled together and actually become stronger so that we can compete properly. And that allows me to go back to your previous question. Why is it different this time with Capital Markets Union? Because I think we are now realizing that actually our strength is really in our unity, and all the barriers that have been persisting because member states often have a protectionist attitude. Some players in some markets feel relatively comfortable in the position they have achieved. They wouldn't like to see more competition coming. They have an influence on those decision makers in member states. So these barriers persist. And I think now that there is a general awareness of the limitation that it means for any of us to try to do it on its own, and a realization that actually if we do this together, we stand a much better chance. And I think it's very encouraging to see that despite the fact that we are facing huge challenges, actually we have it all to solve them. We have the population, we have the skills, we have the money, we have the capabilities. And I think now we have the political will. So we don't depend on anyone to do what needs to be done and to deliver on our citizens' expectations. So I would like to see the current circumstances way more as an opportunity to finally do things that we haven't been able to do before, rather than a threat, even if we are pushed by the many threats that we are sadly facing.
Yeah, I think that facing those threats, the most important thing for us is to understand, like you said, we are big. I think that we Europeans often forget that we're bigger than the States.
We are. and richer if we put it all together. We
exactly.
actually
and if we
save
work
more
together,
even.
we can do this.
Yeah.
Now, we're also big in something else. We're big on saving.
Yes.
There are, I think it's 10 trillion. I think it might be the number. Correct me if I'm wrong. We have one of the highest household saving rates globally. Yet most of that money sits in low interest savings accounts, or I might even say effectively negative savings accounts if you take inflation into account. And people keep their money there rather than putting it into the capital markets where it could work productively and not only give them better returns, but also help Europe grow. How do you see the Savings and Investment Union helping bridge that gap? And what role can digital platforms and green finance play in that?
We do have a lot of money sitting relatively idle. Not completely idle, obviously, because when you look at Europe, we see that the banking sector is really very important to finance the economy. So the money in deposits and into bank accounts is actually money that the banks put to work and lend to the different economic agents. But they don't need that much, and the market does need alternatives. Also, for those who need financing, they need other types of financing than just bank loans. So what we are trying to achieve with the Savings and Investments Union is that a part of that money, which, yes, it's over 10 trillion euros sitting in cash and deposits, and put some of that money to work in capital markets. We already have some very good examples in the EU where that happens, where for decisions made long ago and the right kind of incentives, people actually invest in capital markets, either directly or through funds, pension funds, investment funds, and they actually have much higher returns and they have a better life now and for the future. The Nordic countries are good examples. Sweden stands out by being an excellent example of what could actually be put to work also in other member states. But we come from different backgrounds. We have different experiences, different stories. We are very diverse within Europe. So what we need to do in the Savings and Investments Union is take inspiration out of these success stories and try and replicate that across the EU so that we can give our citizens the opportunities. We often hear people say that we do not have an investment culture. I think that people, if they are given the right incentives, we all behave the same way. We are all very much the same people. So if we get the right incentives, we will all do the same things. And I think we would all like to have better prospects for our future, for our retirement, to put our savings to have a more productive result and to have, obviously, the right setting to do so. So adequately protected, but giving people the opportunity actually even to take some risks if they wish to do so. So the idea is to inspire ourselves on the best practices, give the right incentives, and allow people to make the choices they want to make with their money, but with opportunities. And those opportunities will also be very important for the companies, because the companies will then have access to other financing instruments, namely equity, that can help them to grow and to go successfully through the digital transition, the green transition. Digital platforms are very important to support that, because these days more and more people want to engage in an easy way. So we have apps on our phones and we like to do more and more whatever we can through the apps on our phones. So if we have a digital platform which is simple to engage with, that makes this of investment opportunities easily available, that is part of the incentives that we can design to get people to engage more in capital market investments. And of course, there is a lot of people out there who would like to make sure that they invest in what is sustainable, or they would like to support digital type of investments, or even infrastructure, European infrastructure investments. So if we have these tools that make it easier, intuitive, that people can do in their own time by themselves, we have a much better chance of actually engaging. Of course, we should also have the opportunity for people to interact with another human being when making these decisions and opting for different forms of engagement. But what we see is that a lot of people do like this kind of digital platforms, and they have been successful in places where they have been introduced, namely the Nordic countries that I was referring to before. So we will try with the Savings and Investments Union to give as many and as diverse opportunities we can, so that people find the right solution for them. It's about finding the solutions for people who save. If they save only a little, imagine if you start by saving 10, 15, 50 euros per month when you're young. If you put that money to work properly, it will amount to a lot by the time you retire. So it's about making sure that you can invest even if you have only a very small amount you can spare every month.
Indeed. I tell my kids the same exact thing. And I think listening to you, I'm starting to think I'm a poster boy for this because I use digital platforms.
Yep.
I also invest through my bank. Not large sums. It's just, whatever you have left over, instead of buying an extra beer, you put it into the investment fund for the kids so that they can put it down a mortgage payment when I'm dead and gone. But I want to come back to one thing that you mentioned a little bit earlier: risk. Now it's well known that, or it's a truism that Europeans are more risk averse than, let's say, our cousins across the pond.
Yeah.
Now, speaking of them and a leader that will remain unnamed, and the instability in the capital markets over there that, of course, affects our capital markets as well, we can see that there's an awful lot of volatility right now. And I see that in my own paltry investments that they have indeed gone down. This is going to sound like a provocative question, and it's kind of meant to be. Why do you think it's still valid to encourage citizens to invest in capital markets, even though we see this tremendous volatility because of them?
Well, capital markets will continue to be an excellent investment opportunity for the long term, which is, by the way, what we think about when we talk about capital market investments for retail savers. Of course, if you can have a part of your savings to use the capital markets to play on the short-term volatility. You buy today, you sell tomorrow, but that's more for professional investors, and maybe some retail investors are following it closely enough to be able to enter that kind of play. But what we are talking about is long-term investment. And if you look at long-term investment, investing in capital markets in a properly diversified portfolio always pays off. If you're talking about saving for retirement, and that is not affected by periods of volatility. This is one. We've had many in the past, and I'm sure there will be many periods of volatility in the future. But investment in capital markets for retail savers is for the long term. So if you look at it every day, you can be either depressed or euphoric, but that's not the intention. It's something that you check from time to time, and you take a long-term perspective on. That's what you should do. And again, with the properly diversified portfolio, so you don't put all your eggs in the same basket. You diversify and different types of instruments, different geographies, different sectors of activity, whatever. You diversify so that if something goes wrong in the long term, the others will go right. And on average, you will make a good return. Short-term volatility periods make no difference whatsoever to the kind of strategy that we are planning to put forward.
Got it. That's the strategy that I follow. Even in the 2008, the most important thing is don't panic.
Yes, absolutely.
Because if you're long, and especially if you're relatively young, and my son, for example, recently started investing because he turned 18. So he started investing, and we were just speaking the other day, and he said, all my stuff is down. What do? I said, just don't sell.
Nothing. Just because wait, it's going to go up again.
Exactly. The money that you put in there is not for now.
Yep.
It's for after you're done with college. By the time you're done with college, people will have come, the markets will have come back. So we're not that worried. Okay. One thing that I am worried about is Russia.
Yes.
And Europe is indeed facing existential threats from Russia, and we need to take steps to protect ourselves. As always, Russia strikes first with disinformation. They're really, really good at that. We've seen a big uptake in disinformation stories regarding the Savings and Investment Union and REARM. Now, the stories that I've been seeing multiplied through their disinformation networks is that the Commission is going to appropriate the savings of EU citizens to put into weapons programs, and that Kubilius is going to spend on building up our armies and building up our defense systems. Now, once and for all, is that true?
Obviously not. I mean, we are not Russia. We don't take things away from citizens. We don't behave like that. So that makes absolutely no sense. People's money is people's money. If people want to keep the money in the bank account, they're obviously allowed to do that. It's their choice. What we want to give people is the opportunity to put their money to a better use for themselves, so that they have a higher return. We will never force anyone to do anything, to invest. And even if people decide to invest, we will not tell them where to invest. People will make their own choices. I happen to think that the defense sector is actually a good investment opportunity because it's going to grow. It's a very innovative sector. It has high returns. If you look at the stock market and see what has happened to defense companies recently, their valuation has gone up because the market recognizes it's a good investment opportunity.
Well, one of the biggest European defense firms has gone up, I think, 1,300%.
There you go.
I wish I would have gotten in. My kid got in, though.
There you go. There you go. That's an excellent investment opportunity from a capital markets perspective. But it's really up to everyone to make such choices. And those people also managing funds, they will make their choices according to their mandates. What we say is that this is one of the priorities that Europe has, and that I think that this is a good business case for investment. But we would never be forcing anyone to invest on anything. This will continue to be at the full discretion of every individual saver. Your money is for you to do whatever you want with it. We just want you to have the right opportunities to put it to use, and then it's up to you to take those opportunities as you see fit. So obviously, it is a big lie. We do not behave like that. Never did and never will.
Now, the thing about disinformation is that it walks hand in hand with lack of knowledge. And lack of knowledge makes people vulnerable in their decision-making. The less knowledge you have, the less chance it is that you're going to make a wise decision. So, we're in finance.
Yeah.
Let's talk about financial literacy. Empowering citizens to make informed financial decisions is a major pillar of your work. What concrete steps is the Commission taking to improve financial education across member states, especially for young people?
Well, we will be delivering in the third quarter, as part of the SIU strategy, a financial literacy strategy. It's actually also part of my mission letter. And as you said, it is absolutely key that we allow people to have the right information and the ability to understand that information so that they can make free and informed choices. That's the key element. We will not be starting from zero. There are plenty of initiatives on financial literacy out there conducted by international organizations like the OECD. They have a very relevant work in that field. We have across Europe, we have many regulatory supervisory authorities also with very relevant initiatives on financial literacy. We have the civil society engaging. So what we want to do is to see how can we build on that which already exists and make it better, continue to work, because this is something that we will have to continue to foster. And when we talk about financial literacy, we are not going to teach people very sophisticated concepts about financial markets. For those people who really have that interest, there's plenty of ways to get educated like that. It's about the basic concepts. It's about people understanding that if they use a credit card and they do not pay 100% of the amount in the following month, there will be very high interest, which will compound, and that people will get indebted. It's important that people understand what that means. It's important that they understand what is an interest rate. How do you calculate the interests over a loan? How do you do your simple home budget? And to understand that you have to balance your expenditure with the income that you get so that you don't get over-indebted, because there are plenty of companies out there who would be willing to give you credit. And then you suddenly find yourself with a lot of credit to pay for and not enough money to actually make it through the month. So it's about giving people the knowledge so they can make the best choices on how they spend money, how they can invest any money that's left, how they can plan their future, how they can have a better financial future. That starts as early as possible. In school. It should start in school. So obviously we'll be making recommendations for member states to include that in school curricula as early as possible. But we also have to teach the teachers so that they can teach the children. It's a very broad effort. But it's also about giving people that information in key moments in their lives. In the workplace, for example, whenever I visit a member state on a mission, I always meet with social partners. I always meet with trade unions, for example, because they are key partners in this respect. We need them on board to help us put in place these strategies on financial literacy. They can help us help their workers to actually get access to proper information to make the right decisions. The same for employers, obviously. They can help their workers. For example, if they give them a bonus at the end of the year, that is a perfect moment to tell people, look, with this money, you could save in this way. You could multiply this money for a later stage in life. There are plenty of opportunities to do that. We will come up with a strategy that tries to leverage on what already exists. We do not want to crowd out existing initiatives. On the contrary, there are plenty of good initiatives out there. We want to build on that and continue to foster and look at some categories like young people, as you said. But the other day I was in Denmark talking to a group of very young children, and they were 14, 15-year-olds. They were asking me questions about financial literacy. And, well, there are quite a few questions about the gender pay gap, which I found particularly interesting. And one on how do you support women who decide to stay home, taking care of the family rather than work? How do you make them
They're just working at home.
Now, not working in the workplace. You're right. Obviously, they're working, but they're not working in the workplace. So they can be more isolated from these opportunities. And they will be more exposed financially. They will be at higher risk and less financially literate. So how can you also have strategies that can be directed to this part of the population? We need to think that we have many different choices in living, and we should worry about absolutely everyone. So it's building on what exists, taking this excellent suggestions that I pick up when I go to places and I engage with different stakeholders, and try to make sure that everyone has access to the right information and stimulate critical thinking. For the young people, for example, they have these finfluencers and people through social media trying to tell them, look, you can be rich and live like me. And you can't. There's as they say, the only place where success comes before work is in the dictionary. In real life is exactly the other way around. So there is no such thing as these easy solutions to become rich, to get rich overnight. It doesn't. So if someone tells you that, you have to be suspicious. And that's the message that I always give to young people. If they tell you it's easy to get rich, it's not. It's most likely a scam. It can be intentional or not, but it's most likely a scam. So don't believe in it and look for proper information. Have a critical eye on everything you see and everything you hear, and try to cross-check whatever is said. So it's about also bringing this advice and trying to, as much as possible, to get some sort of filter on the information that they access to. But that's a bit more of a challenging nature.
Mm-hmm. I'm gonna. I've also read that there's other financial literacy programs out there, and I'm gonna try to find them and put them into the show notes so that people can get on that even before our strategy comes out.
There's an excellent one here in Belgium that I visited the other day.
Wikilab.
It's promoted by the Belgium Financial Authority.
Yes.
It's great. It's fully booked for the year from schools. They have multiple sessions a day. It's hugely successful and incredibly appealing because they have these small tablets and they engage in group activities and individual choices. It's really an excellent initiative right here in Brussels.
FISMA actually launched it together. We had a common conference where I had the joy of being the MC.
Great. Well,
Speaking of conferences, I'm glad you mentioned the youth, because you had a youth policy dialogue with, I think it was 15 young people from throughout the EU. And among other things, we did talk about financial literacy. And one thing that I found surprising was that when I brought up the idea of when I was a young man or an older boy, that in school we had these classes where we learned about home economics, but also about finance a little bit. This was pre-internet, so we had to use newspapers, and our teacher said, okay, you have fake €1,000 and you have to invest it, and we would have to follow the stock market every day. And we learned an awful lot through that. And the kids responded that that's not taught that way anymore, which I found surprising and disappointing. So I'm really hoping that that this financial literacy strategy is going to be able to push the member states to really bring back more education on finance in schools, because that can go hand in hand with critical thinking, which is so important for disinformation as well.
I hope so. And it's very important that people have this basic knowledge. It's also about citizenship, being a fully informed, participating citizen, empowered to make your own decisions. I think that, for example, having information on taxes. What are taxes? Why does every single one of us pay taxes, whether you work or not? Because there are indirect taxes, direct taxes, these basic concepts that allow people to understand where the state gets its money from, and also that it is not public money, it's our money that we give to the state to provide goods and services that we consider relevant. That will also allow us to be better informed, more demanding citizens. That improves the quality of democracy. That is also, in my view, part of financial literacy. And I did have this youth dialogue, but I also go, whenever I go to a member state, I also go always to a university and engage also with young people to have a better understanding of what their concerns are related to financial markets, also to pass also the message that EU is important and is positive for their future, obviously, to explain the Savings and Investments Union. This always also builds on the importance of information, curiosity, wanting to know, being attentive to what is information and disinformation. And we may have many strategies to address the disinformation problems that we see, but education is the long-term effective tool to handle this. Educated people, well-informed people with a critical spirit will not be easily manipulated. And that should be the goal for all our citizens. Have the enough level of information to actually be able to distinguish what is true and what is not, or at least be curious enough to go and find out from an independent source so they will not be easily manipulated. We have a lot of work ahead, not only on the financial area, but that's a perfect way to start, actually.
Indeed. Knowledge is power.
Yeah, absolutely.
And Commissioner, you have made me feel more powerful today, because I am coming away from this podcast having learned and gained more knowledge. So thank you so much for joining me today. I really appreciate it.
Thank you very much, Aidas. My pleasure. Thank you.
Okay, here's my take on this. The Savings and Investment Union is crucial for shaping a prosperous and informed financial future for all EU citizens and businesses. Getting people to invest in the future of the EU is a win-win. Instead of keeping our money in low-interest savings accounts, we can put our savings to work, getting better returns and helping business grow, build jobs, and help the whole economy serve us better in the present and the future, for the kids. But we need to do that in an informed manner. Hence the importance of financial literacy. The capital markets shouldn't be looked at as a casino, but as a tool for building wealth, for us as citizens, for businesses, and for the EU as an economy. Thanks for listening today. Keep coming back, like and subscribe, tell your friends, and join us next time for more insights on EU finance. Bye!